Hi, my name's Roy Thompson. I head up Carpenter Box Financial Advisors. Joining with me today via Microsoft Teams is Henry Wilson. Henry's a senior portfolio manager for LGT. We thought we'd get together. It's been a little while since we've perhaps had a conversation. We wanted to share with you, the clients, but we thought with the notion of the UK election this week, it would be sensible to perhaps put something out. I think a lot of clients asking about the political landscape post the UK election and what that might mean for markets. It's an obvious question. It's front and centre. It's been rather rammed down our throats over the course of the last month or so. The kind of result, I just looked on Paddy Power before we came on. Labour are currently 1-80 on to win a majority. So it feels like the markets know what's going to happen as the week goes on. From your perspective, Henry, what does that mean for investments? Or is it that the climate, there's not really going to be too much they can do in the first instance, and it's so priced in that the markets already expect that outcome?
Yeah, it's a good question. In this instance, we think that it's pretty much priced in. When the election was called not long ago, the market just blipped. Nothing really happened. And even as Labour's kind of majority in the polls has remained about 20 points, nothing's really changed. The market has just shrugged its shoulders. From a market perspective, we don't envisage much great impact. The only benefit that we might see is having a party where there isn't a great deal of infighting going on, as we witness with the Tory party at the moment with a lot of infighting. If we shift to a party where there isn't so much infighting and they can provide a bit of clarity, businesses and external kind of international investors might look a bit more favourably on the UK from an investment perspective. So that might provide a little bit of positivity, but we don't envisage it being, to be honest, a massive great change one way or the other.
And it's interesting to me that we definitely have comparatively high taxes to where we've been before. I think it's been in the press the highest for 70 years or something of that ilk from a right-wing government. We've got a left-wing potential government as we speak now on the Tuesday before election day. They've made a promise they're not going to increase income tax or VAT. I guess it does open up the premise about what they might do with things like pensions or capital gains tax. Again, from your perspective, from an investment market perspective, those things would be trimming around the edges rather than sort of material changes.
Yeah, definitely agreed. We don't envisage any great kind of market moves from a policy perspective. So kind of continuation, really business as usual.
And the business as usual, as the year's gone on, it's been quite interesting. I guess the rhetoric at the beginning of the year was that interest rates would come down as inflation has come down. Yeah, inflation has come down. To date, no change in the Bank of England base rate. Still, the predictions out there that will be something that happens prior to the end of the year, assuming the data remains pretty much in line with where it is at the moment.
Yes, agree with that. The market remains very data dependent, very attuned to the data that's coming out relating to growth and in particular inflation. We think that we will see a rate cut in the UK this year, potentially 2, and the same for the US, maybe 1. And the market, our sense is that it just wants to see just one, at least just one, and then they know that the rate cuts are on, and it's almost like a proof of concept. The moment we get that first cut, people can start to think about the fact that we're then in a rate cutting regime where you can envisage the kind of the future being another percent or 1.5% lower. So yeah, very kind of inflation dependent. That's why markets have been a little bit tetchy from time to time over the last few months. The one thing I would say, though, on inflation, which is crazy if you think about it, is that not only is it driving markets, but it's also having an impact on what's going on in politics. One of the big takeaways from the elections in Europe and also in UK and the US is investors saying, hang on, I see that the CPI is coming down, but I still feel a lot poorer than I was in 2019. And there was some data we saw the other day that shows that if you combine energy, food, and drink, it's still about 35% more expensive for people in the UK than it was in 2019. So yes, CPI is coming down, but these kind of readings, the types of readings that overthrow regimes, it's the types of inflationary dynamic that causes people to say, or voters to vote with their feet and say, hang on, we don't like what's going on. And I think that's been what's been reflected in Europe. It's been one of the drivers of what's happened in Europe recently in the elections, where there was a swing towards some of the populist parties. And it's also why One of the reasons why Biden, despite the fact that he's actually done quite a lot to stimulate the economy, the stock market seems to be going okay, inflation seems to be coming down, he still looks like he's unlikely to retain the presidency.
Mm-hmm. Yeah, well, there's a lot to unpack in what you've just said there. I think it's right that people do feel worse off than they were perhaps 5 years ago as a generalist statement. And I think that's definitely having an impact, just as it is interesting to me that markets have done quite well over the last 9 months. What does seem to be the case is inflation has come down. We have achieved some economic growth, admittedly quite muted in quite some parts. Employment is quite strong. There's a lot to be said that those are quite good factors for economies. And I guess maybe time is an issue. Wages are now rising above inflation, so I guess they just got to catch up a year or so down the line from where we are. If that data remains the same, all of a sudden it might look quite a lot better, and the current income, or what will then become the incumbent government, might be in quite strong hand to start their next reign in power. Is that sort of a reasonable view?
Yeah, that's a fair point. The more that inflation comes down, the more likely it is that we'll be able to cut interest rates.
Mm.
And cutting interest rates could be that kind of real relief moment where markets, corporations, people say, oh, this is great. I don't need to be worried about borrowing money or my mortgage or my loan or whatnot. And so that could help stimulate the economy. And what that would also do is it would enable the Fed and the Bank of England to have a bit of firepower for if we do have a period of slower growth. They can cut rates, re-stimulate the economy. Actually, like fully accepting that inflation has been a massive problem for everyone, the situation might change going forwards where interest rates come down, growth remains pretty positive or benign, inflation starts to come down, interest rates get cut, and actually we have a kind of a fresh start for people into 2025. That could be quite a positive scenario for bonds and for equities.
Yeah, good. And you mentioned what you were talking about before, you mentioned the US.
Yeah.
In my mind, the US election has the potential to be more disruptive than the UK election, which might sound a bit bizarre for listeners who obviously focus on what's happening here in the UK. But for me, in terms of most portfolios, in terms of the way people have money managed, there is an international flavour to it. And we still can't avoid the fact that the current leader of the free world is America. And what happens with their election later in the year may have a more material impact on what happens in the UK election this week. It feels to me like Biden, I don't want to make this a political issue, but as you just alluded to, there's a lot of things going in his favour. Is he going to get in again? Let's assume he does. You'd think that the markets would probably quite like that because it would be consistent and the economic landscape is pretty good and the stock market has been going up, as you say. Whereas Trump, if he gets in, he's a right-wing politician. He would be pro-business, and you'd think that would be helpful. But before we got on here, you highlighted some sort of perhaps key risks if Trump was to get in. I don't know if you want to run through those now.
Yes, yeah. Is that unknown factor with Trump where one doesn't really know what types of policy he might try to implement to correct the wrongs from the last time he was president. For example, he might try and change the key policymakers. For example, it's known that he doesn't like Chairman Jay Powell, Chairman of the Federal Reserve, Jay Powell. So if he were to elect a different governor of the Fed, that might cause some issues. It might spook the market somewhat. And it also might be inflationary if they start cutting interest rates before they're meant to and inflation starts to come back. So looking at Trump on balance, you think typically consumers do quite well. Make America, i.e., domestic companies should do quite well. Smaller companies, defense stocks, energy stocks, banks and financials around deregulations should do quite well. But there are also some risks. There's the unknown entity element. There's the fact that he can be quite volatile. There's the fact that he might introduce tariffs with Europe, with China, Japan, Korea. So it's really hard to say, but on balance, he will want to be perceived as a pro-business, pro-market friendly president. Make no bones about it. The issue for the US at the moment is they're running quite a large deficit, i.e. they're spending more money than they bring in, quite a lot more than they bring in fact. And there might come a time where the bond market says, hang on, Donald Trump, if you're going to spend even more money than you were already spending beforehand, then we don't like that. And that might mean that US Treasuries come under some pressure, i.e. they sell off.
Yeah. Okay, in the same way that perhaps what you're really talking about is what might have happened under Liz Truss, and again, bring that
Exactly.
back to a political issue where a set of economic policies that weren't well received by markets. Yeah, so I guess what you're saying is the expectation might be if Biden was to get back in later in the year, it's the status quo. That's not too bad. If Trump gets in, there's the potential for more volatility, but strictly speaking, you might expect him to be pro-growth, which is good for investments.
Yeah, definitely. That's his general mantra. And the funny thing is, at the end of the day, we can do all of these discussions or predictions or forecasts, and the biggest company that we own within these portfolios typically is Microsoft. And you have to ask yourself the question of, do we think Microsoft's earnings on a 10-year, 15-year, 20-year view will be some way or another impacted, whether we get Biden or Trump as president? And on balance, we don't think that they will be massively impacted.
Mm.
Yes, tariffs might cause some disruption here or there, but ultimately, these are big global businesses that are completely intertwined into the world, and the president and their tax rates or their approaches to business that probably won't change it. They're too big and too important to be impacted.
Mm-hmm.
So we remain quite comfortable that our global portfolio that we've got should be quite resilient one way or the other.
Mm. It's a really good statement. It's a reminder, isn't it? A lot of people thinking about the UK election. What you're really saying is that on that front, to some degree, the expectation is that the market is already priced in the end result. So we don't think that would be too disruptive. We don't think that there is perhaps huge policy surprise that would disrupt that. And I guess if I summarise in the US position, that has the potential to create a little bit more volatility, is a little bit less well known at this point in terms of what the outcome of that will be. But underneath that, if we keep selecting good companies over a period of time, the political standpoint is just white noise. And actually, good companies will remain good companies over the longer term and worthwhile investments.
Completely agreed. The saying goes that in politics and markets, the market has a funny way of shooting first and thinking later. And what it means is that it will move quite aggressively one way or the other, up or down, when you get this political news come through. And then suddenly, after a period of time, it realizes that actually, as you say, politics is white noise, and a good company goes back to being a good company, and people start to focus back on the operational performance of these businesses.
Mm. Yeah, exactly. Henry, that's a really useful reminder. Yeah, I think we leave it there. Know what's going to happen at this point in terms of from an election point of view, but some useful reminders to where we are. And yeah, economically not in as bad a place as we were a year ago, and we should take the positives from that.
Agreed.
Yeah,
Thanks, Roy.
brilliant.